I'll start off with an intro of myself and then can go into a quick intro on GSR, and we'll dig into a little bit around market making. We'll leave a couple minutes for questions, and then I'm going to hand it over to my colleague, Josh Gibson, who's going to go through exchange listing strategy and leave some time for other questions at the end of that as well. So a lot to get through in the hour, but thank you all for being here, and look forward to teaching you a little bit about market making, and hopefully connecting afterwards and staying in touch. So thanks for the time. So just quickly about me, as I mentioned, I'm Alex. I lead our U.S. business development team at GSR. I have a background in traditional finance at a couple banks and high frequency trading firms. I've been at GSR a little over 3 years, and I oversee our market making business, our OTC trading, and I also help out on our VC investing, which works closely with that group in terms of identifying quality leads and groups that we hope to work with in the future. About GSR in particular, GSR has been in business for almost 11 years now. We are one of the first market makers, and hope to be in business for the next 10 years. At the moment, we are just over 200 people. We have a global presence, offices in New York, headquartered in London, offices in Switzerland and Spain, a large presence also in Asia out of Singapore. As I mentioned around my role, our focus at GSR is providing liquidity in markets, and specifically, centralized and decentralized exchanges and, token issuer market making. So we are one of the, if not the largest token issuer market making. We also have a very active OTC trading desk, which stands for over the counter. And OTC is responsible for trading with, institutions such as hedge funds, VC funds, also high net worth individuals, founders, large holders, and then working directly with token foundations for solutions as well. So just a quick highlight, which is on this page, is that GSR is the only market maker to have a regulatory approval by the MAS in Singapore. We spend a lot of time and energy to, achieve this designation, and work closely with the government controls there to just make sure we're doing things the right way. And one of the standout items about GSR is that we really focus on the legal and regulatory side of the business, and we want to do things right, both for ourselves and for our clients. This is, as I mentioned, the global presence. The sort of highlight that it's mentioning here is that we have a dedicated DeFi team. So for those who are either building a DApp or in DeFi, or are curious how that plays into our services, definitely happy to touch base on that front. We take our risk management very seriously, similarly to how we take our legal and compliance very seriously. And Josh will touch on that and how it regards to exchanges a bit later as well. And then we have a venture team that's deployed a little over $100 million in the past 5 years. So fairly active on the venture side. So that's the GSR quick overview. So now I'll dig into market making a little bit, and I think that's part of the reason you guys are all here. So when it comes to market making, some of you may know a bit about market making in traditional assets. There's the likes of Citadel and Virtu and other large players that provide liquidity and trade on the New York Stock Exchange and equities and other traditional models and bonds and commodities and equities. There's an IPO model where you have a group that works with you from a bank to help bring your equity to market. In digital assets, that's a bit flipped on its head. Some of the structures that have evolved in cryptocurrencies are very sort of displaced around different regions and have a lot of different types of trading venues that you can be on. So from a centralized exchange perspective, there's 4 or 5 in the US, there's 20 in Asia, there's 3 or 4 in Europe. So definitely a lot of regional and trading venue disparity, and having a market maker that can provide global coverage is very key. Within this market making setup, we help bring the token to market, as in the initial exchange issuance, and also provide the back end liquidity following the initial listing. So, what is market making? What do we try to do here at GSR, and what do other market makers also try to do? Just taking a quick step back, with market making, there's a bit of a spectrum. A lot of participants or traders will call themselves market makers, and they may not exactly be market makers. They may be proprietary traders, and in which case a prop trader is in the market to gain a profit by taking liquidity from one venue and sourcing it on another. When we provide our market making services, it's much more of a service liquidity oriented business, where you have depth that you're putting in the book, and you have certain metrics that help to add liquidity and increase the trading experience for users of those centralized and decentralized exchanges. So, the core goal of a service providing market maker is to provide, as it says here, orderly trading, which means that if, as I said, you're listed on 10 different exchanges and the price of your token is $1, well, it's the same versus ETH, the same versus Bitcoin, the same in the US as it is in Asia. That allows for a good trading experience. The structure of market making also reduces volatility by providing multiple layers of depth and a tight bid-ask spread. This allows the market to not gap around in large moves one way or the other. It also allows GSR to work as a provider where we ingest information and pricing metrics, and then push out a single source of price, which it closes off dislocations, it closes arbitrage, and it allows for efficient trading. That's facilitation of the marketplace, and then inspiring confidence. The point of that is essentially to make sure that if somebody's looking at your token to trade it, whether it be an institution or day trader, someone who's looking to acquire the token, they see a healthy order book and they feel confident in wanting to participate in that order book. So what does an unhealthy order book, what are some of the issues in market making that you want to be aware of, pitfalls to avoid? Imbalanced order books. So let's say someone's looking on CoinMarketCap and there's $100,000 on the offer and $1,000 on the bid within 2%. That means that the market's very skewed. There's a lot more sellers than buyers, and looks like an imbalanced book. Market makers that are doing a good job aim to smooth out that order book. And there's always going to be some sort of imbalance. You might have 50K and 70K on one side of the order book, and that can shift over time. But if it's very skewed one way or the other, that doesn't indicate a healthy market. So a market maker that only has a selective presence is another problem. When you're looking at high quality market making, you want somebody who has a high uptime. Generally, we aim to have around 97%, and really it's closer to 99% uptime. Sometimes there's feed issues with different exchanges. Sometimes we have to update our models, but generally looking for 24/7, 99% of the time we are active trading. From a regulatory perspective, wash trading is something that you want to avoid. If you have a market maker that's mentioning that's speaking about that, those are fake volumes that happen when a trader trades with themselves at the mid of the market and has no economic impact on the market. And in traditional assets, it's something that is not looked kindly upon by regulators. So you want to avoid that from your market maker. And in your token, price manipulation, I think that's pretty obvious. You don't want someone who is moving the price against the regulatory scrutiny that exists in the market, such as pump and dump schemes, which there are price manipulation when someone's just buying and moving the price. That's perfectly fine. But someone who is selectively manipulating the price, either based on insider information or other topics, are definitely looked poorly upon in the business. And then finally, professionalism, which I think is fairly self-explanatory. So just to illustrate this with a bit of a chart, you can sort of see here that order book 1 on the left side is a pretty thin and uneven order book. There, if you have $1 being the midpoint, you can see the offers go up and the bids go down. There is not a lot of depth even within 10% of the market. It takes until you get about up to $1.10 to even have $100 in this order book, or 86 on the bid side. So that's a pretty skewed order book. If you look at order book 2, again, the top of book spread here is quite wide, and that's not a good trading experience. We have in the middle chart $1 at mid, but the first offer comes in 115, the first bid comes in at 85. So that's a wide market. You generally want your market maker to look to maintain a market that's tighter than 50 basis points. And not something that's 15% wide here. And then the final one is what a healthy order book should look like. So far right, you have a 1 penny wide on top of the market here and the bottom of the market. You have about $25,000 worth of depth at the top that increases and layers throughout the order book. You have a lot of even depth where it builds. There's additional depth at the end of the order book. So that's what, if you're looking at this type of view on an exchange, you would hope to see in the order books. Again, this sort of just illustrates why that's helpful, because of the way that prices will gap around and move around without a market maker who's doing a good job trading for you. Having a orderly, efficient chart. And, again, I feel like I've said it a bit, but just to make sure it's clear, the market maker does not influence the price. We only set the conditions for price discovery and for prices and efficient trading to take place. So we're not going to be, net buying or selling and driving the price one way or the other. We're going to be even two-sided on the order book when we provide liquidity, like this chart on the right, where it's pretty balanced. There may be a little bit, of skewed book, like we said, that's not coming from the market maker, but generally that's, what a healthy order book would look like. And if you guys haven't, seen it before, easy to go check on your own, going to CoinGecko or CoinMarketCap and looking at these spread and 2% depth metrics. These are just screenshots from there, just to make sure that you guys know how to go check on those type of things yourself. Look at projects, large and small, to get a sense of who has a good market maker, who's doing a good job on the trading side. And then, from GSR's perspective, it's very important for us to work with our partners for the long term, that they know what we're doing and how we're doing it. So we provide, quite a bit of transparency into our trading, which is in the form of reporting. We show the amount of volume that GSR is doing on the exchange. We show the spread. We, include these metrics in a daily, weekly, and monthly report to the clients. We're also in the final stages of a interactive dashboard that should be going live in the next 2 months, which will be, a big upgrade even to what we're already doing. So when you're looking for a market maker, make sure that they have reporting and transparency in their service. And again, this is just a bit of a more detailed look at how our reporting shows: GSR volume, total market volume, GSR market share, top of book spreads, shows our average uptime up here, 100%, top of book spread, 14 basis points, market share, 42%. So that would be a very healthy market making relationship in an order book. And then, as a kind of final item here to look to wrap it up, would just be to give you a bit of an intro into the different models that exist. So when GSR provides our market making service, the way that we operate is under the loan and optionality model. So what we do is we take a loan of your native token, we use that to populate the offer side of the order book, and then we use GSR's balance sheet to populate the bid side. So we're meeting you halfway, providing our own assets to pair with the loan assets from the token issuer. The optionality component of it is that we will have the right to purchase the loaned assets at a future expiry point, and only at that expiry point in the future at an above market price meaning that if the token's trading at $1 on launch, we'll have agreed to a striking point that either sets off an average of the first few days of trading, or is agreed at a price that's higher generally from where the launch is going to take place. So that means that you are giving up some upside, you're giving up a little bit of optionality, but you're also sharing in the growth potential to the extent that if the token performs, both the market maker and the project can hopefully be successful. If it doesn't, you actually get all those tokens, that loan, back at the end of the period. And the reason why this exists outside of aligning upside is that when we're populating the order book with the loan tokens, and those tokens are purchased from GSR, if we had to return the full loan no matter what, we would have to go back into the order books and purchase those tokens elsewhere, which actually wouldn't reduce the volatility. It would increase the volatility and make that depth that we're actually providing in the order book inefficient. And the reason that that makes sense is because as the token's going higher, our loan is being distributed into the market. But then as the token turns around and goes lower, GSR is repurchasing that loan. And that action creates natural volatility and reduces volatility naturally and increases volume and essentially leads to efficient trading. So the loan and optionality model is what's preferred and most efficient for both regulatory and trading efficiency reasons. The other models, just to walk through them briefly, are retainer-based model. This is where you pay a monthly amount. You still provide a loan of the token, and generally you also provide a loan of stablecoins. So you're providing both sides of the order book, and you're paying the market maker a monthly fee. In this scenario, the problem, as I was just mentioning, is that the depth that you show in the order book is not actually tradable because you don't have the option to repurchase those tokens. If someone buys 100 tokens from you, you have to go rebuy those tokens in the market. If someone sells 100 tokens to you, you have to go sell those 100 tokens back into the market, driving the price higher, but also often driving the price lower. So when things move down, it potentially creates a downward spiral, which is negative for both the project and the market maker. And the goal of a retainer-based market maker is just to retain that monthly payment so it doesn't align incentives. Finally, the profit sharing model, that one has a lot of regulatory potential issues because both the trading firm and the actual token issuing entity would be in an agreement to share profits, which often means that the market maker trades through the treasury or foundation's actual exchange account, which can look like manipulation of your own token to regulators. And by having this profit sharing model, you're incentivizing trading against the community in to the benefit of this treasury. Also, what's not mentioned is profit sharing means that there has to be profit to be shared. If there's losses, the treasury entity will also eat those losses, and the market maker is really not taking any risk here outside of the regulatory risk. So they're sharing in the upside, and then they're laying off all the downside. So those are the three models. Hopefully it's clear why the loan and optionality model is both preferred from regulatory, trading efficient, and from a long-term alignment perspective. And overall, just kind of like the last page is rules of engagement. What should you do? How do you find a market maker? Look, you guys know us now. We'd be happy to talk to you, one-on-one, go through more details, walk through this, put together proposals, work, as a long-term partner. And again, I'm not going to sit here and say everybody should use GSR. We don't even have the capacity to work with every client. We're also somewhat selective on who we decide to work with and how we go about that. So you should do your own research. You should do reputation checks. You should ask in the market who's out there. Again, we feel very strongly about compliance. Hopefully many of you feel that way too. We want our partners to share in sort of our values and be in this for the long term. And then finally, as mentioned, transparency and communication. So that is the market making overview. Hopefully you guys learned a thing or two. Happy to open it up for questions for about 5 minutes here, and then can hand it over to Josh to go through exchanges.
I'll start with the question, if it's possible. So yeah, thanks for great presentation. Clarifies a lot of stuff here. Still have several questions. So Regarding the market maker, the idea is to have one market maker for a project. Yeah, and it should be a market maker for on top of all the exchanges, both like spot and derivatives markets, or we have to split sometimes having different market makers for different exchanges, different pairs. Oh, how it should work?
Yeah, thanks for the question. It depends on the needs of each project. So that gets in that, is specific to each project on how many market makers. I've seen as many as 4 or 5, which is definitely very excessive. And there's also been plenty of projects where we've worked with as the sole market maker who have been just as happy or more happy. But to your point, yes, the kind of like 3 things that it sort of depends on is, one, the exchanges that you're on, making sure that the market maker that you do hire covers at least the core group of quality exchanges where majority of your trading's happening. You also may, depending on how strongly you feel about on-chain liquidity, you want your market maker to be on Uniswap or another DEX as well. So if you have a market maker that is only working on centralized exchanges or not covering the DeFi exchange, you could take a large centralized market maker and a smaller DeFi market maker, pair the two together. Oftentimes people will look at it, depending on how large the token is and then the number of exchanges, having one market maker and then a secondary one just as a backup in case something were to happen, which, we don't think it's necessary, but oftentimes, we're not going to tell you, no, don't use 2 market makers. Very happy to work with other partners. Having 2 market makers in the order book can, those market makers can interact. It can increase volume. It can create some redundancy. So it's definitely a consideration. So, worth, again, talking to GSR, maybe 2 or 3 other partners and get a sense of who would be good for you to work with.
Yeah, thank you. And if you don't mind, 2 more questions, short ones. I might misunderstood a little bit regarding market making models. You told about like loan and profit sharing and regular fees. Regarding the profit sharing, you told that it's not good in terms of like regulatory mainly. For other models, do you have a profit, and who is getting this profit? Market making is getting the profit from trades, or company is getting the profit?
Yeah, so in the other models, the market maker is getting the profit both in the loan and option, and in the retainer, you're receiving just the retainer amount per month. I will tell you, and if a market maker tells you that this is not the case, they're probably lying. But if you're a market maker who's actually providing liquidity, two-way liquidity in maker-oriented markets, it's very likely that by actually trading, by actually providing that liquidity, you're not making money. You may lose tiny, tiny amounts, like a couple basis points, providing that liquidity. So you're compensated with that option as the, sort of, we don't make money on all of the markets we trade, even with options, but because you're providing this liquidity, you're sort of a sitting duck. So if I have 100K worth of, XYZ token on the offer and 100K on the bid, someone can come in and push me around and take liquidity from me. And it's oftentimes that it's not easy to make money, and it's generally you're going to lose money doing that. So you're compensated with this optionality, which allows you to either sell or repurchase at the time. And then, in the scenario where the price goes higher, oftentimes the market maker is going to make some profit. And if the price goes lower, it's generally not going to make profit. So you're aligned to the upside in that scenario.
Okay, great. And a final question from my side regarding the timing to engage with market makers. So all the companies here, I guess, are planning to launch a token somewhere in 2025. So what is the time we should sign a market maker? When we should start to finding a good market maker for us? Whether it should be like 3 months before TGE or after the TGE, or what's the timing?
Yeah, great question. It depends on the nature of the project and where you are, but I would say we like to recommend sort of, it's never too early to at least have initial conversations, but generally within 5 months or 4 to 6 months of ahead of launch, you should be talking to a market maker. Josh is going to go through it in a couple of minutes, but the exchange processes are taking longer than ever. So you want to be thinking about things correctly. You want to have some of those initial conversations with market makers. They're going to tell you, hey, consider this. Think about what XYZ on your tokenomics, your launch plan, your go-to-market structure. So the way we do our market making, we really hope to be and act as an advisor and a consultant, a partner that's kind of in it for the long term with you. So starting relatively early, multiple months ahead of time is not a bad thing. And then ultimately signing the agreement is probably going to happen 2 to 3 months ahead of launch once you start to get some of those exchange conversations going, and then ideally you'll have that both the market making and the exchange side in a good place ahead of your TGE, and you can help move things around at the right time and be organized. There are plenty of people who have come to us and said, "Oh, Binance is listing next week. Can you get market making done?" Sure, that happens sometimes where Binance just decides last minute and people are unaware and XYZ, and we can get it done, but generally helpful to have it done a few months in advance.
Thank you.
Alex, great presentation. How do you address the cold start problem? I mean, obviously we're getting out, we're going to launch a TGE, we want volume. We've been approached by a ton of market makers about wash trading and just a bunch of scams out there. But how do you guys, from a legitimate standpoint, address the concept of the cold start problem? I mean, we have no volumes. Like, what can be done in a legal capacity to help that?
Yeah, I mean, it's a good question. And I think, a lot of that actually turns back on the project as opposed to the market maker. I think partially it's on the market maker. What you want your market maker for in that scenario is to set the conditions that allow people to trade, help make the right exchange introductions so that you are getting, new exchanges. Like the reason Binance is a top exchange, there's the most traders there, there's the most eyes. If you get listed on Binance, people are going to buy, people are going to trade it. But even the smaller exchanges, they are going to be new, fresh eyes. They're going to be new, fresh traders. So you want to combine what the market makers can help you with, which is more exposure on trading firm or of traders and the trading firm on the exchanges, with the other side being you as the project invigorating your community. So it's like socials, marketing campaigns, rewards, getting people incentivized to trade. So we'll set up the conditions, and you and bring part of the traders, you bring the other traders, and that's ultimately what we see as kind of the recipe for success. But to your point, there's also the cold start problem is real, and Josh will talk about it a little bit. Oftentimes we recommend not starting on DEXs because of that very point. And we're seeing some new DEX liquidity and some things that are improving in the marketplace. But historically, and still kind of like our baseline view, is that if you start on a DEX, the only people that know about the project on the DEX are close community members, insiders, very crypto native people. You want to combine that with traders from Asia, from other places that are seeing it on the headline on KuCoin and saying, "Oh, that looks interesting. Let me dig into it. I'll buy a couple tokens. I'll trade this." So that kind of helps in the process, because if you just go on the DEX and don't get that initial volume, you can sort of start to dry up a little bit, and then it's hard to get new eyes.
Excellent. Thank you.
Cool. I think we'll just call it there, and leave some room for more general questions to both Josh and I at the end, so he has time to go through his presentation here. Thanks guys.
Alex. Hi everyone. Nice to meet you. I'll just share my screen. Okay, can everyone see that? Cool. So just to give a little bit of background, so I help lead partnerships at GSR. I've been at GSR about 4.5 years. I'm based in New York, been in crypto since 2017, and prior to that I spent 10 years in traditional markets working in foreign exchange, sales and trading. So part of my role at GSR is managing the exchange relationships, so ensuring that we're getting the best out of the exchanges, from connectivity fees to helping our clients get listed on all the best venues. So today I'll talk a little bit about exchange listing strategy. This is just a high-level intro, and then more than happy to speak to anyone one-on-one after the call. So typically, if you take a step back and look at kind of where the roadmap is for most new projects, the exchange listing strategy comes into the later part of the development of the project. And I think probably one of the biggest mistakes that we see with projects is they don't allow enough time to properly go through an exchange listing strategy. and give it really enough thought and time to get listed on the best venues. So yeah, first step is highly encourage people to give this like some serious consideration, and at least 4 to 5 months of proper planning to get listed on the best venues. So when it comes to the best venues, GSR, we're integrated with about 30 exchanges globally. That's centralized and decentralized venues. But really, there's only about a dozen centralized exchanges that really matter from a volume perspective. So these exchanges listed here account for the vast majority of global volumes. So really, if you get listed on these exchanges, you're really any sort of other centralized exchanges will add a marginal benefits. So we really focus on these exchanges for our clients, and part of the service that we offer at GSR is helping our clients get listed on these exchanges. We have very good relationships with all of these exchanges, from the management teams to the connectivity teams to the listing teams, and we're very familiar with the processes that each exchange will require for a listing. So we categorize these exchanges into US exchanges and ex-US exchanges. So really in the US, you really only have 2 major exchanges, and that's Coinbase and Kraken. And then outside of the US, you have a number of exchanges that are primarily domiciled and operate in Asia, with Binance, being the largest centralized exchange of them all. So, we categorize these exchanges internally, and each exchange is, has its own sort of strategy involved in getting listed on it. To start with, each exchange typically has around 5 to 10 people in a listing team, or some exchanges call them a research team. And really, these people are responsible for assessing the project and going through the proper DD before they present it to a listing committee or a management team for a decision on listing. This whole space is constantly evolves. Over the last few years, we've seen strategies at each one of these exchanges, change from a relatively easy process to nowadays, which is a much more comprehensive, kind of complex process to get listed. So yeah, I think it really is about being prepared and following the right steps to make sure your project has the best chance of getting listed on one of these exchanges. So I'll briefly just touch on Coinbase and Kraken to start with. So I think the first step is to consult with your legal counsel whether or not you're going to be pursuing a US exchange strategy. Some projects don't want to list on the US, and they'll have different views from their legal counsel on the US. We work with about a dozen law firms globally, including some of the most well-known US law firms. I must say there are some law firms that are very crypto friendly and will have a different view than other law firms. So it is recommended to get a couple of different reviews from different law firms as to your strategy here. But typically we're seeing about a 50-50 split between projects listing in the US and 50% wanting to avoid the US completely. So yeah, in the US, Coinbase and Kraken. With Coinbase, they probably have the most strict requirement out of any exchange that we deal with. There's no going around their formal listing process, which is outlined on their website. So you have to go through their application and ensure that you have all of the relevant criteria that they ask for. They are very slow at listing. They have a long lead time, at least 6 months, if not longer. And we know their listing team very well. So essentially, once you've gone through the listing process and you're not getting a response, or we can help back channel support directly to their listing managers for you. So that's essentially how it works with Coinbase. One caveat with Coinbase is that they do not list projects that have raised money within 6 months. So just keep that in mind when you are doing a round. And then when it comes to Kraken, which is the other big US exchange, they can geofence clients. So they have a geofence ability to restrict all US clients for certain token launches. This is something that you can work out directly with Kraken, but I'd say probably around 30% of their launches restrict US users. So that is quite a unique proposition that they can do. Most other exchanges don't offer that hybrid model. Otherwise, moving over to Asia, Binance, Bybit, OKX are the top 3. Typically, exchanges in Asia charge fees, whereas exchanges in the US don't. So Kraken and Coinbase, don't charge any type of listing fee whatsoever. In Asia, there's typically 3 types of fees. One is a listing fee, one is a marketing fee, and then there's a security deposit, which you may or may not get back depending on the performance of your token over the first few months. So typically all of these Asian exchanges will charge all three of those fees, or one or two of those fees, or sometimes they'll waive all fees completely. It's really quite bespoke. It depends on your project, how much traction you're getting, your backers, and those various factors as to how those negotiations go. It's very competitive to get listed on these exchanges in Asia. We're seeing a large backlog at the moment of projects all trying to get listed. Binance and OKX in particular have reduced listings substantially in the last 6 months. This is because there was a number of high FTV listings that resulted in poor performance of the token. And so both Binance and OKX have reviewed their listing policy and process, and so they've been listing far fewer tokens than they historically have. Bybit, coincidentally though, has taken the opposite stance, and they've actually been listing quite a few tokens over the last few months, and they've been charging substantially higher rates than normal, so they've been taking advantage of the situation. So there's a lot of politics that come into play between these exchanges. All of these exchanges, they want to be first with listing a new hot token. They want to basically attract users to the exchange. That's how they make money, by volume, by retail users clicking buy or sell. And so they want to attract new users to the exchange, and that's how they measure the success of a new listing, is how many new users have been brought to the exchange. And that's actually how the listing managers get paid their compensation as well. So if you have a user base that is unique, that is a unique group of users that typically are not on one of these exchanges, then I think you have a better chance of being listed on one of these exchanges. Typically, there's kind of two ways that you can get listed. One is a launchpad listing, and then one is a direct listing. So launchpad is a very popular, well sought after method of listing, as you're guaranteed a listing and you're essentially marketing yourself to millions of retail users. Whereas a direct listing is still a very good way to list, but it's usually no restrictions on what exchanges you can get listed on. So yeah, Binance, Bybit, OKX would be our top 3 exchanges in Asia. And then you have Gate, MEXC, KuCoin as sort of the tier 2 and tier 3 venues in the world. And then there's very few exchanges in Europe that we really concentrate on. It's really the US and Asia are the 2 central hubs. And in Asia, it's primarily Singapore and Hong Kong as the 2 main crypto hubs. We trade all types of products on these exchanges, from spot, perps or futures, options, structured products, and then also involved in staking and other forms of margin trading. So just moving on to the next slide, these are some other notable mentions. So these are other exchanges that we connected with or we have strong relationships with, and other ones that you should consider in your listing strategy once you have listed on the major exchanges. So there are various other exchanges in the different geographic regions indicated here. So when it comes to exchange due diligence, this is extremely important, especially since post FTX, where FTX imploded and took down a lot of trading firms and other folks that had capital on the exchange. So, we constantly review new centralized and decentralized exchanges. We have a whole team of people here at GSR that is reviewing these exchanges, from everything from finances to KYC, AML policies, to insolvency policies, essentially everything under the hood, to make sure that we are working with the best venues and ensure that our clients' funds are as safe as they possibly can be. We typically like to keep as little funds as possible on the exchange itself, exactly to avoid that counterparty risk. And we use platforms like Copper Clearloop, Fireblocks, BitGo, and other custodians as a means to safe store our clients' funds. Yeah, so I've talked about launchpad and direct listing. I've talked about legal advice, first of all, for US or non-US. So yeah, firstly, you should be considering setting aside a budget for listing fees. This is something often that projects don't really think about when they fundraise. And then when they go to list, they're realizing that it's going to cost them, a few $1 million to get listed on some of these Asian exchanges. So very much when you're doing your rounds, you should consider putting aside some funds for this. You should also consider perhaps even trying to bring on some exchanges onto your cap table. I think the ultimate cap table is a mix of investors from the West and the East. A few trading firms like GSR, a few traditional investors, some marquee tier 1 names, and then also some exchanges would be helpful. So Coinbase, Kraken, they both have venture arms on the US side, and then on the Asia side, all of the exchanges have venture arms as well, and it can substantially help when it comes to a listing. Other things that can help when it comes to listing is integrating with the various ecosystems of each exchange. So, for instance, Binance, Bybit, OKX, if you integrate with their wallets, various parts of their other ecosystem, then that can help substantially also with the listing. So when it comes to fees, this is a rough guide. So typically the listing fee is indicated here up to 500,000. We've actually seen Bybit ask for even more than that, up to 800,000 recently for the listing fee. And then the marketing fee is typically around that 75 to 150K, and the security deposit, as I mentioned, you may or may not get back, depending on whether or not your token performs over the few months. Again, all of these can be waived or reduced to zero, or close to zero. It really depends on how favorable your project is for the exchange. So, everything in crypto is quite fickle. Like the attention span is what everyone is trying to get, and crypto tends to focus on one thing to the next. So, a year or two ago it was NFTs, and then it was, metaverse, meme coins, AI, deepen. So it really depends on what your project is working on, if it kind of fits into the current narrative as to how successful you might be. And again, like these listing fees are negotiable, and they're typically paid in dollars and a mix of dollars and tokens. And again, that is all negotiable as well. GSR will do our best to help guide you in the right direction, and we provide color on what we're seeing from other clients, what they're getting charged, and can give you advice on what is a good deal and what isn't a good deal. These fees do change quite often, so just take this as a rough guide. So in terms of like listing criteria, in terms of what most of the Asian exchanges look for, so typically the Asian exchanges move quite quickly when it comes to listings. So I still recommend like at least 3 or 4 months headway to make sure that you get the best deal here. But they can move relatively quickly. Like we've seen, like Alex alluded to earlier, like Binance listing a token within a week. So it really depends on your project, like I mentioned. But as a rough guide, these are some of the things that the Asian exchanges are looking for. So 100K minimum users in your community. There's a lot of bots now that can fill up those numbers. So the Asian exchanges also want on-chain metrics, so that's quite important to really target as well. But if you can set up all your Discord channels and Telegram channels, etc., and start working with some good marketing firms. We work with a number of marketing firms across Asia and the US, firms that can help with like white paper translation services, can help with KOL marketing. Those types of firms would really be useful for a lot of your community building. And then if your project's already listed, most of the top tier exchanges want to see at least 5 million ADV on other exchanges before they'll take your project seriously. Again, there's a lot of competition out there. Most Asian exchanges want to list new projects that haven't been listed before. ERC20 is by far the easiest to integrate, and we've seen the feedback constantly from exchanges that they prefer integration with as easy as possible, to use less dev resources. And then again, tier 1 VC, some Asian exchanges want to see at least one tier 1 VC. So tier 1 VC is like a Pantera of the world, A16Z, one of those types of well-known brand name VCs. They want to see at least one of those names on the cap table. We've seen that from Bybit just recently. And then tokenomics. So don't be surprised if the exchange, one of the top exchanges, trying to get listed on Binance, they may come in and ask you to completely restructure your tokenomics and vesting schedule. So we've seen this multiple times where they've said, we won't list you unless you change your vesting schedule to 4 years or 5 years, or change your tokenomics as such as this. Essentially, they're trying to reduce as much supply on day one and increase team lockups. So that's a constant battle. I think it's quite a stressful thing for a lot of founders of projects, where they come up against a tough decision of wanting to list on one of the top exchanges, but having to basically, do what the exchange asks. Otherwise, they won't have a chance of being listed. And then I've already talked about, VC investments can help. And then you ideally want at least, 1 to 2 market makers. Most exchanges won't list a project without at least 1 market maker. So the US exchanges, no fees. They'll undertake a lot more DD typically than the Asian exchanges will. Coinbase has a program called Coinbase Quest, which is previously Coinbase Earn. So if you commit to that program, that can help with the listing on Coinbase. And if you also integrate with Coinbase with Base, that can also help with a Coinbase listing. So then on DEXs, Alex mentioned this earlier, we've seen a lot of projects over the years list on DEXs, and then it's just been basically an impossible task to get listed on centralized exchanges after that, because it's just been a negative price action since listing on DEXs. So I can't recommend enough not to list on a DEX first. It's basically the quickest way to have your project die. And then these are all the exchange listing application forms. This is what you need to fill out in advance of trying to connect to the exchange listing teams first. All of the exchange listing teams will ask you to complete this form. And it's best just to complete this as soon as possible, get in the queue. Ideally, you'd complete this once you've done your raise, you have your tokenomics roughly set, and you're about, ideally 6 months out from listing, you'd start completing these application forms. With Coinbase and Kraken, I'd probably even recommend to do it even earlier than that. All of these exchanges have large queues, so it's really about getting into the queue, and then once you've had your application looked at, then we can connect you directly to the listing team to help move you along. So that's kind of a rough, high-level view of the exchange landscape. We've been doing this for many years now and have helped hundreds of projects list on all the major exchanges. This is not something that we charge for. This is just part of the service of being a GSR client, and more than happy to come on any one-on-one calls with any of you guys to talk about any of these details. But I'll open up to Q&A right now if there are any questions.
Thanks, Josh. I thought that was great. Same with you, Alex. One question is, how does GSR differentiate from other market makers? And why should someone go with GSR over another market maker?
Yeah, it's a great question. I think when you look at the market making landscape, just rewinding a few years ago, there was about 4 major market makers, including GSR, and we basically dominated. The 4 of us dominated 90% of the market share, and then there was a small handful of other market makers. Over the years, though, there's been a lot more competition open up, and fast forward to today, there's probably about 20 market makers globally that offer market making as a service. GSR and the others, sort of top 2 or 3, still maintain a large market share, but there's definitely a lot more competition. I think there's a low barrier to entry to market making. A lot of these smaller market making shops can set up some trading algorithms and call themselves a market maker. I think kind of what differentiates us from these other smaller competitors and other new entrants is that we're a well-established firm. We're 240 people across Europe, Asia, and the US. We've been doing this over 10 years. Solid track record, hundreds of projects that we work with at any one time, and we've spoken to thousands of projects. There's very few projects that list on exchanges that we've had no communication with. We've been an active investor, as Alex said, over 100 million, invested over 150 projects. We're a well-established player, and we can really offer a lot of hands-on approach. We have over 25 people in our sales team alone, so every client has a dedicated Telegram chat with 20 plus people from GSR, ranging from our management team to our DeFi team. We really bring in every type of specialist required for the client. And then just on the last point, part of my job in partnerships is really building up our ecosystem of partners. So we work with marketing firms, law firms, folks that write white papers, translation services, KOLs. Exchanges is obviously a big part of that, but we really have all of these resources and network, and this is what we open up to all of our clients, free of charge, part of the overall service. So at any time, if you guys need connections to anyone, we can really tap into our network, which a lot of these other market making firms just don't have, right?
Hey Josh, on that note about tapping into your network, at the beginning of the presentation, Alex was mentioning you guys work with a lot of foundations and probably help them do treasury management and OTC deals and things. A big part of our token model does kind of rely on doing a lot of these token swaps behind the scenes with other like L2s and bigger networks. I was curious if GSR has kind of experience in that, like kind of helping like two projects do sort of like a token thing and a token swap in a way that maybe has minimal impact on the order book, or kind of how that might work.
Yeah, so like we do work with a lot of foundations, like and some of the biggest projects out there. For instance, we're the title sponsor of Solana this year. So we work with a number of the big foundations, and we offer all types of treasury solutions. So we have an OTC trading team, which is a separate group of traders from our programmatic market making team. This is a global team, and they offer all types of services. We kind of have two types of treasury services. One is treasury solutions. So this is just if you're coming in wanting to sell tokens or create some sort of basic hedging strategy, that falls under that branch. And we work with all types of clients on that front, from high net worth individuals, founders, team members. We're doing TWAPs and VWAPs and those types of things across exchanges. Then the second part is treasury management, where we can really dive in and really help manage your underlying treasury and come up with all sorts of sophisticated strategies around how to generate the best yield on that, how to diversify. And so we have a treasury team at GSR that manages our own treasury balance. So we're a private company. We've never raised outside money. And our treasury team internally manages those funds for GSR. So we offer that service now from our treasury team. So we can help on both fronts, on treasury solutions and treasury management. So it's something we can definitely look at. Like we have a DeFi team and an OTC team where we can get together and come up with any sort of bespoke solutions that you guys need.
Fascinating.
I should also note that like all of our market making clients receive discounted fees on our OTC offering. So that's another reason to use GSR as a market maker.
Fascinating. And I'm sure if we use your treasury services too, that's also lower risk than doing some sort of like multi-signosis thing to try to manage her.
Yeah, exactly right. Yeah. So whenever the time is right, more than happy to connect you with our team, and we can look at what you're trying to do, and then we can come up with solutions on that front.